Happy Thursday out there, Team 42. It's your skipper here, Darius Dell, to present our macro minute for Thursday, August 15th, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to stay on the right side of market risk, you need to be a client of 42 Macro. So today's key macro questions are, will BOJ policy normalization remain a key risk to the yen carry trade? Is our green shoots globally theme intact? Is our China front-loading stimulus theme intact? And is the U.S. economy in or nearly in recession? Our answers are investors should expect more policy normalization by the BOJ in the months ahead now that asset markets have calmed down. We expect the bullish combination of growth meandering higher and monetary easing to continue in the UK economy and across much of the global economy over the medium term. That means central banks are unlikely to broadly and durably achieve their stated inflation mandates, but we do not believe that is their priority in a fourth-turning regime. Maintaining order in global sovereign debt markets amid structurally elevated public debts and deficits is far more important. China's June activity data were broadly in line with consensus and consistent with recent trends that implore Beijing to act quickly and forcefully to stimulate domestic demand. If they do not, China will continue to slip into a structural debt deflation akin to 1990s Japan. China needs the Fed to normalize U.S. monetary policy and a weaker dollar far more than the U.S. economy currently does. With respect to the U.S. economy, is unlikely to be in or near a recession, according to the latest jobless claims, retail sales, and industrial production data. Transitioning to our 42 macro dashboard, as always, we'll wrap up with the question from our community. This one's regarding rates versus risk, specifically equity risk. It says, hello, Darius. Just a very general question here. When bond yields move down, doesn't that reduce the risk-free position in treasuries and start to favor risk-taking, aka equities? I'm still noticing bond yields down, equities down. Am I wrong? How should we be thinking about this? Is this a continued yen carry trade effect? So the answer is no, it's not a continued yen carry trade effect. It's called deflation. That's the typical market pattern that you typically observe when asset markets are in deflation. That's typically bond yields down, bond prices up, stocks down, risk down, volatility rising, dollar strength typically. And so obviously not all those things happen. And commodity prices down, crypto prices down. So that's typically what you observe in what we call deflation from a top-down market regime perspective. Obviously, the yen carry trade unwinding may contribute to a deflation market regime, but it's not necessarily the only reason you have a deflation market regime. And generally speaking, what deflation is pricing in is slowing nominal economic growth. And you can have a deflation market regime with negative absolute performance in things like the stock market, and that typically is just slowing nominal economic growth with no policy support to offset that. And you could also have a deflation regime with significantly negative absolute performance in asset markets and obviously defensive active leadership in both. And that's typically when the markets are trying to price in slowing nominal growth to a below trend level without adequate policy support, or worse, policy tightening that is exacerbating the problem. And so, we understand how these, we help clients understand these types of dynamics in asset markets, and we use systems like our case portfolio construction process or our discretionary risk management overlay to communicate exactly what they should be doing in their portfolios at all times to stay on the right side of market risk. So good question. We'll wrap it up there. Darius Dell presenting our macro minute for Thursday, August 15th, 2024. Everyone have a wonderful day out there. Best of luck. Catch you back here tomorrow.